MACD is an acronym for Moving Average Convergence Divergence, and it's a technical analysis tool that helps traders to spot trend, momentum, and potential buy and sell opportunities in the market. MACD indicator measures the relationship between two exponential moving averages. In a previous video, we explained what moving averages is and how to trade with moving averages. We also explained the difference between a simple and an exponential moving average. If you are yet to see that video and you don't understand the basics of moving averages, then you should consider watching that video. I'll leave a link to the video in the description below. In this video, we are going to be explaining what MACD indicator is and how to use MACD indicator for trading. Now, let's start with what is MACD indicator. Like I said earlier, MACD indicator is a technical analysis tool that helps traders to spot trends, momentum, and potential buy and sell opportunities in the market. And as we move further in this video, you will understand how MACD indicator is able to help traders do this. When you add the MACD indicator to a chart, you will notice that it is drawn below the chart and it is made up of three key parts. First, the MACD line. The blue line on the MACD chart is called the MACD line. This is a result of subtracting a long-term exponential moving average from a short-term exponential moving average. Usually, a 26-period EMA and a 12-period EMA is used. However, you can always choose to change the parameters at any time you choose. Now notice that the MACD line keeps oscillating above and below zero as the price goes up and down. Note that the baseline represents zero. If the subtraction of the long-term moving average from the short-term moving average is a negative number, the MACD line will go below the baseline. This indicates that the long-term moving average is higher than the short-term moving average, meaning that price is in a downtrend or moving sideways. Alternatively, when the MACD line is above the baseline, it means that the short-term moving average is higher than the long-term moving average, and this indicates an uptrend. Now the signal line. The red line on the MACD indicator is called the signal line. Usually, the signal line is a 9-period EMA. However, you can decide to change the input whenever you wish. The signal lines help to identify potential buy or sell signals as it crosses the MACD line. So when you are looking at the MACD indicator, you want to pay attention to crossovers between the MACD line and the signal line. This is because traders use these crossovers as trading signals. When the MACD line crosses above the signal line, it's a bullish or a buy signal. And on the other hand, when the MACD line crosses below the signal line, it's a bearish or a sell signal. When a histogram is added to a MACD chart, you want to keep in mind that each bar of the histogram represents the distance between the MACD line and the signal line. The bars of the histogram gives a visual representation of how weak or strong the current trend is. When the bars on the histogram are bigger, it means the trend is strong. And when the bars are smaller, it means the trend is weak. Also note that when the MACD line is above the signal line, green bars are formed on the histogram column. And when it is below the signal line, red bars are formed. So on this chart, we see that the MACD line is above the signal line, and so green bars are formed. However, you can notice that the green bars are small, meaning that there is a weak uptrend. On this chart, you can also see that the MACD line is below the signal line, and so red bars are formed. However, we can see that the red bars are bigger, meaning that there's a strong downtrend. Another thing you should note about the MACD indicator is that it can be used on different time frames. So you can use it on a 5-minute time frame, 1 hour time frame, 30 minutes time frame, 1 day time frame, 1 week time frame, and even a 1 month time frame. So it's a good technical indicator for different types of trader, whether you're a swing trader, a day trader, an intraday trader, or a scalper. The MACD indicator will be useful to you. At this point of the video, you should understand how to identify a bullish trend or a buy signal and a bearish trend or a sell signal using the MACD indicator. You should also understand how to identify the strength of a trend using the MACD indicator. And if you do not understand that up till now, then you may want to go back. But if you understand that at this point, then let's carry on to how to use a MACD indicator. Now, in theory, the MACD indicator seems very simple to understand, read, and use. But in practical, it may not be the same. In practical, the MACD indicator requires some skill to properly use. Because I could just say, buy when the MACD indicator crosses above the signal line. That's when there's a bullish crossover. And sell when the MACD indicator crosses below the signal line. That's a bearish crossover. But in practice, that may not always be the case. In practice, it is important that you know when it is best to use a MACD indicator and when you should not use a MACD indicator. The MACD indicator is best used in a trendy market. That is when there is a clear uptrend or downtrend. In a volatile market, you see the MACD indicator and the signal line making multiple crosses, and as such, there will be false crossovers. For example, we see several crosses between the signal line and the MACD line, but no actual change in trend as the price made range-bound movement. But as price broke out and there was a clear trend, we see the MACD indicator being useful to giving signals again on this chart. The MACD indicator is simple yet powerful because it combines momentum and moving averages, making it versatile for identifying trends and timing trades. However, like with every other indicator, the MACD indicator should not be used alone for making trading decisions. You may want to confirm its signals with other indicators and trend tools, and also combine its usage with price action and fundamental analysis. I really hope you found this video helpful, and if you did, don't forget to give it a like and of course, subscribe. Videos like this one are part of our product called My Trading Land. By visiting mytradingland.com and going to the University tab, you have access to Forex trading videos like this one for free. Aside from that, we also have a Forex trading community where you can freely interact with other Forex traders and know what they are thinking. This will be very useful for you as it allows you to pick the brains of other experienced Forex traders. On mytradingland.com, we also have a free economic calendar and news tab that allows you to stay updated with events that could have potential impact on the market. All of these are free of charge. Just visit mytradingland.com. I'll leave a link to it in the description below. It is free. Thank you and happy trading.